What's up, guys? I hope you are all having a lovely Tuesday here. I wanted to jump into a few key metrics that we don't often talk about on our This Week in Crypto calls and many of our analysis. And I wanted to put a spotlight on a couple of these because they're quite useful, especially right now when altcoins, especially, are fluctuating to and fro as Bitcoin is extra volatile. It broke that 40K barrier for the first time in 6 weeks yesterday, getting up to about 40,400 before dropping back down to 37K, and is now at the time of this recording sitting at about 37,500. So I wanted to do a quick analysis on what we're seeing from Ethereum, maybe a few altcoins. I'll try to look at maybe one other one, just to give you guys a quick demo of how we do a lot of our analysis when making some of the insights that we make here at Santiment. So right now, what we're looking at is the daily active addresses and active deposits for Ethereum overlaid on the same chart. Essentially, daily active addresses are the total amount of unique addresses interacting on the network on a given day, while active deposits are known deposit addresses of those total active addresses and how many of them are actually making a transaction on a given day, interacting with the Ethereum network. Keep in mind that these two lines are on their own axes. So the orange line is actually a much larger number than pink. Orange being active addresses, pink being the active deposits. So you can see here, 508,000 is the latest number for active addresses. 41.9 thousand is the amount of active deposits. So something like 1/12 of the total of the active addresses are active deposits right now, but they're both showing on their individual highs to lows, which is why they look like they're on similar planes right now. However, there's a lot of interesting things we can gather based on how they're fluctuating above each other. We can see here on the 24th, for example, the active addresses were well above active deposits on a relative basis, comparing their highs and lows to each other. On the contrary, we see that, back on June 29th, there was a big increase in active deposits relative to active addresses. And generally speaking, when we see the pink, the active deposits, well above the orange, that's a sign that there's a much higher percentage of deposit addresses going off compared to the total amount of addresses interacting on the network. When this happens, it's generally a more bearish sign than usual and a sign that there could be an imminent correction. And if we look, that's exactly what happened here on June 29th. We had a big local top where Ethereum was at 2,200, and by the next day it got down to 2162. So, not a massive correction by any means, but certainly this was a good indication that deposit addresses were getting a little bit high. And as we've discussed in many of our insights before, deposit addresses generally are a sign that people are moving their funds to exchanges with the intent of doing a sell-off. It doesn't mean that it's a whale, but it means that there's a large total contingency of deposit addresses compared to the norm. And then on the contrary, right, we can see something like this run of 6 consecutive days where orange was anywhere from mildly to severely above the amount of active deposits. That's a good sign because it means that there's a lot of non-deposit addresses that are interacting on the network. And that allowed the price run up to really just take effect. And we went from about 1,700, give or take, all the way up to, before this trend broke. Actually, it never broke. We still are seeing active addresses significantly higher than active deposits on a relative basis. But you can see here, we had a big rebound effect because active deposits stayed relatively dormant while address activity was increasing quite a bit here. So we went from 1,700 all the way up to a top of, actually, if I zoomed in, I won't do it now, but it got above 2,400 for a short period of time. So that's how I generally look at any Ethereum-based asset where we have active addresses and active deposits. We even have active withdrawals, which you can overlay. I generally just look at active deposits because including active withdrawals on this kind of analysis gets a bit redundant. I'll show it on the same 1 day scale. You can see it kind of takes on its own nature a little bit, but yeah, all three are useful to a given extent. We also have a sand sheets model that can show exactly how things are looking on a given day. You can see when some are looking more uh, advantageous for active addresses, and how many here, most are looking like they're on a lower trajectory, and they're seeing a higher amount of active deposits than active addresses. If you want more information about it, just drop us a DM on Discord, and we'll be happy to tell you more about how you can get access. All you really need is a Sandbase Pro account. Go to add-ons, Sandsheets, add your API key with your Sandbase Pro account. You'll get a free, not a free, but a API key that goes along with your paid account after you become a pro member. So this is a great model. And that's all I'll say about active deposits and active addresses for now. There's a great correlation, though, between where prices go and how address activity overall is looking versus just deposit activity. So I definitely recommend you take advantage and check it out on Sandbase and on our Sandsheets model. Transitioning over to MVRV. We've talked about MVRV plenty of times, but I do want to put a spotlight on the 30-day metric right now because it does give a very nice snapshot of how average traders are doing, and thus what their sentiment is going to be toward the market. As we've covered many times, when people get overly negative or they're heavily underwater, that tends to be a sign that markets are imminently going to turn around. So when we see them super positive, like back on around the all-time high levels in mid-May, we had the MVRV ratio for 30-day investments way up at 36, 37% here. And sure enough, this ended up being the all-time high of Ethereum, and it plummeted all the way down. All these people got faked out who were FOMOing and buying up here, and suddenly the average trade returns were way down to negative 30% just 2 weeks after the all-time high. When it got that low, you can see here, nothing came close to that in the last 6 months. This is definitely a relatively super low MVRV. Therefore, we were able to see a quick bounce because it was so negative that it was bound to equalize. The thing with MVRV is it's always going to hover around 0%. I can go back to the last 5 years here and prove that if I averaged all of these lines together, it would average right around at the 0% line, give or take 1 or 2%. And that's the same no matter what time frame you're looking at. So going back to 6 months really quick, we can see super negative points like here and here. These were basically the local bottoms. We had another one here. These were the three lowest points over the last 6 months, if I'm combining these two, essentially. But here, and here, look how the price rebounded every time we got down low like that. It's a tremendously helpful signal. We even have this fourth one that isn't quite as low, but it was low enough. If you look up here when I'm hovering, you can see it still got down to about negative 11.7%. So traders were in the negative double digits, and them being that underwater, it's a good time to go against the crowd if you're okay with taking that risk. And you'll often catch local bottoms by doing this. It's not a perfect method by any means, but combining it with address activity, active deposits, it can really be tremendously useful. And of course, really briefly, I'll also go over the same for tops. Obviously, we talked about the all-time high, but even here, notice how the price was climbing, but the average returns were getting a little bit lower. That's because people were kind of prematurely taking profit here. We were starting to see prices that people were not quite used to for Ethereum. Remember, the previous all-time high for Ethereum before this was around 14 to 1500, depending on the exchange. And once we broke that, a lot of people were taking profit up here thinking, okay, that's the new all-time high. I'm just going to play it safe. And the MVRV was actually going down as price was going up because people were taking profit a little bit soon. But eventually they got it right because we had this plummet right around 1960, just before 2000, essentially, if I were to zoom in, and prices came back down. Um, so whether it gets extremely high or extremely low relative to the last 6 months, you can even look at maybe the last 2 years or so. These extreme points, I mean, look at Black Thursday. This was the lowest average return that we had ever seen, if I'm not mistaken, or at least in the last 5 years. And that was essentially the bottom. If you saw that all these average traders were just getting brutalized here, it was a pretty good signal that you could buy in cheap at a relatively low risk because people had already lost so much. And this MVRV metric is going to hover around 0% over time, no matter what fundamental events are going on in the world. So that's all, guys. Just wanted to give you a quick update on those two metrics. Hope you found this useful. Please feel free to give us a like and subscribe. Always helpful. I know it's a cliche thing to ask, but we really appreciate you, and you spreading the word allows us to continue to grow and make these insights on a week-to-week, day-to-day basis. Thank you all so much.